We're covering self-employment tax and Schedule SE for the Enrolled Agent Part 2 exam. This is a frequently tested area because it combines several core concepts: tax rates, income thresholds, and a critical adjustment to income. Self-employment tax is how independent contractors and business owners pay their Social Security and Medicare taxes. The total rate is 15.3%, which might seem high, but it's because a self-employed individual pays both the employee and the employer portion of these taxes. This breaks down into 12.4% for Social Security and 2.9% for Medicare. The exam will absolutely test you on the calculation, and the most common trap is forgetting the first step. You do not apply the 15.3% rate directly to your net profit from Schedule C. First, you must multiply your net earnings from self-employment by 92.35%. This step effectively allows you to deduct the employer's half of the SE tax before you even calculate the tax, making it fair compared to W-2 employees. Forgetting this multiplier is a guaranteed wrong answer. Let's walk through an exam-style example. Imagine a sole proprietor has $150,000 of net profit on Schedule C and no other wages. Step 1 is to find the base for the tax. $150,000 times 92.35% equals $138,525. This is the amount subject to self-employment tax. Now we apply the rates. The 12.4% Social Security tax only applies up to a certain annual wage base, which for exam purposes, we'll use a figure like $176,100. Since our $138,525 is below this limit, the full amount is subject to the Social Security portion. The 2.9% Medicare tax has no wage limit, so it applies to the entire $138,525. So the total SE tax is $138,525 times 15.3%, which equals $21,200.83. The exam loves to complicate this by adding W-2 wages. If that same taxpayer also earned $100,000 in W-2 wages, their wages would have already been subject to FICA tax. You must subtract those W-2 wages from the Social Security wage base to see how much, if any, of the self-employment earnings are subject to the 12.4% Social Security tax. The Medicare portion is always applied to the full amount of net earnings from self-employment. Another common trap is the additional Medicare tax. This is an extra 0.9% tax on earnings above certain thresholds, such as $200,000 for a single filer or $250,000 for those married filing jointly. The exam will test if you know to combine W-2 wages and self-employment earnings to see if the taxpayer crosses this threshold. After you've correctly calculated the total self-employment tax, there's one final step the exam will test: the deduction for 1/2 of self-employment taxes. You can deduct half of what you paid in SE tax as an above-the-line adjustment to income on Schedule 1 of Form 1040. This is not a business expense on Schedule C. In our first example, the deduction would be half of $21,200.83, which is $10,600.42. To remember the key steps, use this phrase: net 92, tax 50. First, take your net profit and multiply by 92.35%. Second, calculate the tax. Finally, deduct 50% of that tax above the line. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.